Bitcoin charging like a bull, smashing through short-term resistance, but hold up. On the 4-hour chart, we got a sneaky bearish divergence creeping in. Is this a trap or is Bitcoin about to rocket higher? Stick around and find out. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you're ready to dive in today's market analysis, make sure you hit that like button, hit subscribe, and make sure you come on over to X and follow us on X, where we talk about crypto and Bitcoin all day, every day, 24 hours a day. All right, today we're going to be unpacking Bitcoin's explosive bullish breakout of the flag pattern that we've been talking about. We got this sneaky bearish divergence that's showing up on the 4-hour chart. We got a massive micro macro signal with gold leading the charge and key indicators that are screaming that the bull market is just about to get started. So buckle up, crew. We're going to be diving into this, and it's going to be a wild ride. All right, let's dive into the charts. Bitcoin is broken out of a textbook bull flag pattern, pushing towards the 96,000 level. It's a super bullish setup, showing strong momentum. However, there's a little plot twist to this. We have a little bit of bearish divergence showing up on the 4-hour chart. And so we got, we're seeing RSI, started to make lower highs here, and we got higher highs coming up on our price itself. So I don't know. It's a little confusing right now, but it could mean that there's a short-term pullback coming, or it just might be a trap for bearish traders. Either way, we need to stay sharp here. I'm going to get into that because really what we're seeing is we got a CME gap. And I'm going to show you that right here on this chart. We do have a CME gap. Then we're staying within that gap. We really haven't filled it so much yet. I would love to see this thing pull back. We do have resistance up at this level right here, right? I'm going to say right around 99,000, but really there's resistance right here at this 96 that we're banging up against right now. We haven't been able to just plow through it. So since this is a weekend, price action could be sluggish. Lower trading volumes on Saturdays and Sundays often lead to consolidation. But don't be surprised if it takes a breather before the next big move. Plus, the CME gap is sitting between 91 and 93. Now, generally, these gaps will act like magnets, and they pull price, tends to fill them. So if Bitcoin dips down into this gap, say to 92,000, it could be a golden buying opportunity for savvy traders. Now, let's talk technicals, because we're going to be getting into the good old Wyckoff. Wyckoff is screaming accumulation, and we're in a higher structure right now. For those new to Wyckoff, this is a pattern where smart money, think big institutions, quietly buy up supply before the massive markup, and we're in like phase D, where Bitcoin's retesting and forming higher lows. So key events like a sign of strength rally past the 97,000 and the last point of support of 100,000. If this Wyckoff schematic plays out, we could see Bitcoin targeting the old high of 110, 109, and then smashing through it and heading up to the all-time highs that we've been looking at. Of course, there's going to be some stops along the way. It's not just going to go straight up to $200,000 a coin, but this is actually showing that the marketplace is accumulating. Now, if we look at global liquidity, all right, global liquidity is been front running Bitcoin. We've been talking about this. There's always like a 105-day lag. So what does that mean? And it means when the global money supply and liquidity start pumping, Bitcoin tends to charge. But it often consolidates because there's a lag of like 105 days, and we've been talking about this. So right now, liquidity is trending up. Bitcoin's price action is screaming bullish. Historically, we've seen Bitcoin consolidate in this phase before exploding higher to catch up to the global liquidity like it did in 2020. I'm betting on more upside, and the charts back it up. All right, so let's zoom in on the macro that we were talking about, good old gold. All right, because this is huge. Gold is leading the way, and Bitcoin is playing catch up. Gold made the first move, smashing to all-time highs above the 2,700 recently, signaling a flight to safe haven assets amid global uncertainty. The world is calming down right now at this point. We're talking about tariffs basically getting settled. The Dow Jones has basically recovered. We want to look at the DAX index. The dollar is actually recovering a little bit. So things are calming down. The dollar recovery actually slowed down the Bitcoin rally, I believe. That's just my opinion. But as we see, gold itself, it's leading the way. Now, when we start to see profit taking happen in gold, where do you think the money's going to go? It's going to really be ultimate risk on assets like Bitcoin and other altcoins. So this is the calm, in my opinion, before the crypto explosion. So if you're holding Bitcoin right now, don't blink. The best is yet to come, and here's why. The M2 money supply, like we were talking about, let's go over to M2. We go over to the M2 money supply is surging right now. And every time the liquidity expands like this, think 2020, Bitcoin goes on an absolute tear. More money in the system means more capital flowing into assets like Bitcoin. Look, all new all-time highs are inedible, but we're talking, we got to get through the recent high of 109 first. We're looking in the future. We know Bitcoin's going to be a lot higher, but if you're wondering if you're late to jump in, you're not. The party's just getting started. Of course, we're going to get dips. So if you're not hyped yet, I want you to look at CoinGlass. This bull market is nowhere near over. CoinGlass has 30 of indicators. Not one has been hit. Zero, nada. None of them are flashing right. That's 0 out of 30. That means the market has tons of runway left. Altcoins and Bitcoin are about to move higher. We're seeing signs of altcoin strength in pockets like Solana, Avalanche, and Bitcoin, of course, pushes those higher. That, we're looking at the capital will flow into alts for massive rallies. If you've been waiting to diversify your portfolio, this is your green light to start researching those gems. So before we wrap up, Crypto Crew, I want you to make sure that you are aware of our trading community. You just click on this link. It's 100% free. You'll be taken over to this site where we'll be dropping insane alpha and trading setups every single day, from short-term breakouts to long-time moon bags. We want want to trade like a pro? Want to trade like a pro? Come on and join us. Make sure also, if you want, you can click onto our preferred broker where we have low fees, lightning fast execution, perfect for our strategy. So join the crew, level up your trading game. Let's stack those profits together. So what's the game plan? What's the game plan right here? We got the bullish market structure, rock solid, backed by gold's breakout, right? We talked about that. Where's the old gold right there? We got CoinGlass basically saying we haven't hit one of our bull market peak indicators yet. Unfortunately, we got a short-term 4-hour bearish signal, which is, I think this is great. I mean, I would love to see a pullback to 91,000. I have these two lines up here for a reason. So before I leave, I want to show you this. All right, I'm going to bring this in here. Okay, this is basically where we're at right now. Okay, so we got resistance up at 98. We got that CME market gap that we were talking about right there that we would like to see get filled. It would be wonderful if it does. But right now, this is where we're at. Okay, so let me get my good old brush here. We're trading right between these two zones right here. All right, now if we get above 98,000, now this is a weekend. Like I said, it should be kind of quiet. But if we do get above 98,000, the 100,000 is very, very close, right? I mean, that goes without saying. However, I would love to see this market CME gap get filled. This would be nice. So basically, this is where the retracements could occur. I would think it could go all the way down to 90,000 before then. It's on a free wild ride upward. But right now, the damn coin seems really, really strong. So we might potentially break up towards 98 before we get down, back down a little bit. But I don't know. You just got to stay sharp here. Just got to stay sharp. So, like I said, we got a weekend sluggish price action. So stay nimble. The macro setup is screaming new highs, but keep a close eye on the CME gap, which I just said the 91 to 93.7. It could be a huge buying opportunity if we get it. So that's it for today, Crypto Crew. Hope you like what you see. Make sure you follow us on X, and always, always trade with your head, not over it. Do your own research. These are just my opinions. And remember, always as a short-term trader, enjoy the party, but dance near the door. Cheers.